Kim, it's good to have you, and you're way out of consensus on this rate hikes or lack thereof, right?
I know, and being out of consensus doesn't feel good, but we'll talk next year at this time and see, what actually happened. But what I've been doing is I've been realizing the U.S. is not in a vacuum, and they really do have to pay attention to the strong dollar. While I wouldn't say that you necessarily go, oh, the U.S. is an export economy. Exports are very, very important. If the Fed raises rates too fast and out of sync with the other large areas of the world, it could mean for a very, very strong dollar, which ultimately would not help the U.S. economy. And I think the Fed knows that. So,
I mean, it's interesting to highlight the risk that a strong dollar could pose from rate hikes. I'm trying to think through the mechanics of this, though. The bigger concern that you have would be if the Fed is way out front, if they do a lot more quickly than other central banks.
Yes, exactly. And I mean, that's what I think Wall Street consensus is looking for, right? A really quick taper and then 3 interest rate hikes, although they're not going to be, like really large interest rate hikes, but it still could be meaningful. And if China and the EU don't go along and at least stop their, liquidity programs at a minimum and not follow through on interest rate hikes, that could make the U.S. dollar extremely strong. And I think that the Fed understands that.
One more point on this. Doesn't it feel like the global central banks will all be part of this tightening campaign, though?
It does, but let's see what Omicron brings to their table and what their individual issues are. We are separate parts of the world, and, 2 against 1. I don't know. I'd say the U.S. would be odd man out there if both the EU and China want to maintain their low interest rate policies.
No, it's a great point. So is all of this wishful thinking as a tech investor, Kim, where we know a lot of people have been concerned about these Fed hikes, the tightening, undermining the performance of tech stocks, you like Xilinx, Micron, NetApp, for example. Do you think they can do well in either environment?
I do, and I think because it's an underlying issue that they're trying to fix. The reason why I like tech is not for the consumer-oriented Oculus sort of applications. I think at the very best, tech gives companies productivity. And I think especially after these last 2 years, companies are rethinking how to arm their workforce to make the people who can and do show up to work even more productive. And that always leads back to technology. Adding to that, 5G is another thing that I think can make companies and people more productive. And I think that rollout, as well as whatever applications come across on that to make people more productive, it's just going to explode semiconductors.
Yeah.
So I think that's an easy place to look if you're looking for the future, and the future is semiconductors.
Obviously tech is your specialty. We talk a lot about that. But what do you make of the other sectors? We just mentioned energy and real estate having a monster year. Is there anywhere that you would definitely want to steer clear from, or any other areas where you see opportunity?
No, but I would look at each of these companies that you're going to put in your portfolio through the lens of technology. How well do they deploy technology? I think that's the question you always want to ask, because that is the thing that could boost a company's earnings, is how effectively they deploy their capital and make it grow. And again, I hate to have a one-size-fits-all answer, but a lot of it is technology to make things more productive.
Yeah, I think more people are coming around to that point of view. Kim, thanks so much for your time today.
Happy New Year.
You too. Kim Forrest with Bokeh Capital Partners. Well, it was a record year for IPOs with nearly 400 of them pricing. That was almost double the year before. That's the good news, but the bad news is more than half of them are trading below their IPO price, including Loan Depot, Rent the Runway, Poshmark, Oli, and Robinhood. What does that mean for next year? Joining me now is John Martinko. He's president at Drexel Hamilton. John, you watched this IPO.